For more on this sector and the company's performance, we are joined by the CEO of Vukile Property Fund, Laurence Rapp. Laurence, thank you very much for your time this afternoon. You've called these financial results the best performance since the company listed. What stands out for you about the past 12 months for the company?
Xolani, thank you very much, and thanks for having me on the show. Really, when we look at the operating metrics in the business, that is sort of really where we make that comment around being the strongest performance since listing. So we look at a very strong tenanting environment, vacancies having dropped to 2%. We're seeing continued growth in rentals, positive reversions, now of around 2.4%, which means that tenants want to be in our centres. They're trading very well. Their growth was up by over 6%. Our rent-to-sales ratios are very low. We're collecting 100% of our rent. So really, when you look at all the operating metrics that we use to drive our business day to day, they really are at the best levels that we've ever seen. And I think that sort of is really testament to the very tight operational focus that we've had, and also the very detailed promotional and marketing activity we've been using to drive activity to our centres. So I guess in an economy that's not growing, it's not only a question about saying the economy is not growing, but rather saying, how do I get a bigger slice of the pie? How do I make sure that our malls are better positioned than our competitors, that people want to come to us? And I think that's really worked very well for us in the past year. And that's not only in South Africa, but in our Spanish business as well, where we have equally strong results in the Spanish portfolio.
Laurence, let's talk about something that many CEOs and managers of companies around the country are grappling with, and that's the electricity crisis. You've called it, as a company, a risk to retail jobs, livelihoods, and the ability of many South Africans and their communities to function adequately and safely. This is a huge crisis even for yourselves in the past 12 months.
Absolutely. There's no question. This is one of the key issues the government has got to get right. I think it's a non-negotiable. We have to get that right. From a Vukile point of view, I must say we have found solutions, that have been very effective. So let's just sort of first talk about the impact of load shedding in the past year. The numbers are not as big as one might think. The total cost of diesel in our portfolio was only 11.2 million rand. The net impact, in other words, the net leakage after what we couldn't recover from tenants, was only about 0.6% in terms of our property net operating income. So not as dramatic an impact as people might think. But what Vukile has been doing, since 2017, we've been installing solar panels on many of our shopping malls, which has been tremendously cost effective for us. What we announced earlier in the year is a 350 million rand spend to introduce solar and battery storage solutions into our portfolio. Now, that is a very exciting development, because what it does do is it firstly removes the burden of providing energy, generators, diesel, etc. from our tenants. In future, they will procure that backup energy from us in our centres. We can guarantee lights on from 9 in the morning till 4 in the afternoon in our top 17 centres, which is where we're rolling this out. It provides our tenants with a very uniform experience in coming to our shopping centres, because they know that all the retailers are going to be trading. So that sort of hesitance of saying, well, do I go to the mall or don't I? Can I get what I want? That's no longer on the table. The malls will all trade. Importantly for our investors, we believe that we can roll this out and earn a yield of between 13 and 16% on that 350 million rand. So it's accretive for our investors. And from an environmental point of view, you're no longer burning the fossil fuels, you're relying on green energy. So it's something where we have had to sort of, necessity is the mother of all invention. We've come up with a solution. We'll be spending the remainder of this year rolling that out, so the full impact will really only come in the following financial year. But nonetheless, we're getting a very positive response from our tenants, and we think that that's a very effective solution. But that doesn't negate from government's responsibility and imperative to fix the energy solution as quickly and effectively as possible.
350 million rands, a lot of money to spend on those PV solutions. Let's talk about one last thing. Vacancies reduced from 2.6% to a low of 2%. That is good news, while rental reversions turned positive in the period under review. In the next year, the 2023 year, many are saying the times are still going to get tough for many. What is the outlook looking like for you? What risks are you seeing?
Sure. Look, the first 3 months of the year have started off relatively well. We're still seeing strong tenant demand coming through. Excuse me, probably too early at this stage to call a trend for the whole year, but we have been happy with the beginning of the year. But I do want to stress one point. Remember, our business is not as sensitive to immediate changes in consumer spending as one might think. So 99% of our rental income is contractual rental income. The only way that doesn't come in is if the tenants fail and stop paying. Now, when you consider that we've got probably the strongest covenants in the market, in Spain, for example, 95% of our rental income comes from national and international tenants. In South Africa, that's 84%. So the immediacy of saying there's a consumer downturn doesn't mean that our rent stops coming in. We've got contracts in place. We've got about a 3.8% lease expiry profile. So we are very, very well insulated against a short-term downturn in the market. What you may find is that retailers may slow down expansion plans, but we think it's very unlikely they're going to start shutting stores. So on the whole, we feel, yes, there are headwinds, but we are very well positioned and very well insulated to deal with those headwinds because of the contractual nature of our income.
Laurence, thank you very much for your time this afternoon. That there was Laurence Rapp, the CEO at Vukile Property Fund, the JSE-listed real estate investment trust.